Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So on Friday, the S&P continued to make new highs, and now I think the question really remains if the rally can continue. Scott, what are your thoughts?
I feel like I get that question asked a lot because no one who's not involved wants it to continue, and people who are in the rally are like, oh my goodness, I don't want to fall asleep behind the wheel because we've come so far. But all in all, you look at the trend since the November bottom, it's been intact and there really hasn't been that much pain. And if you actually look at the gap up to start 2013, the bulls haven't even really had a gut check. You go here to the chart and you'll see on a micro version, here are the two most recent trends. This one was from June that went all the way up to the September highs. Here is where we broke. This one we broke below the 8-day, the 21-day. That was right in October, and you had like a 5-6% move to the downside. Then what did you have right there? You had a red dog reversal on November 16th. From there, you had a nice gap up. And then from here, you went all the way up to this first downtrend. Remember I was drawing this little downtrend that came into attack? So right here is where we hit some resistance, rightly so, after a big move from the bottom. Then we corrected somewhat, but held the Fibonacci retracements where we had to. And then this started out the new year. But since the new year, after the first big gap up, we had about 5 days of digestion. 8-day moving average caught up. You had a move. We put in some work higher, went sideways, and then all of a sudden, finally, bam, Thursday into new highs. And then we had a little bit of a pullback Friday afternoon before holding higher again. And then here we are. So I think, we do a little bit of work above 147.40 to 147.60. You do have your pivot here of 148, I think this is 49 and above this. We could be on our way to 150.
Now, what if we took a look at the monthly charts? What would you garner from that?
Well, if you look at the monthly and you look at the weekly, it gives you a more broad picture. And whenever you get to new 5-year highs, it's almost like you have to go to monthly and weekly charts, which is good. That means it's healthy. That means that that people who've been holding longer term are starting to make their money back. And hopefully, if they had a macro plan, I know we're in like the same place we were almost a decade ago, but if you put monthly funds in on a macro basis, you have a nice cost average basis, even if you're not an intermediate trend trader like ourselves. So if you go back to the chart of the SPX, you will see, you go to the monthly chart, and here it is, guys. Here is, I know that we're not above where we were, back in 1999. I know we're not above the 2007 highs, but we're pretty darn close. So here is the big time resistance. Here is that double top that's controlling the market. We just got above, a key level here, which was right around that 1472. So really, there's no resistance until, there's psychologically 1500, but really about this, 154 to 157, which was 1540 to 1570. Now, Brittany, I don't think we take it out on this first attempt, but at some point this year, we will be testing that 1540 to 1570 area. And if we do go straight there, guys rolling up their shorts are going to probably be jumping out windows. And even guys who are waiting for a pullback might not be happy. So until we break the 21-day moving average in any of these indices, I would say stay with a portfolio approach. If you're watching individual stocks, you obviously have to use more of a micro plan. But right now, the S&P and a lot of indices are working their way higher. Why fight the tape?
Well, this is a huge week for earnings, especially in tech. The Qs has been lagging, though, did finish in the red on Friday. Are you expecting the Qs to do some catching up this week?
Well, hopefully, and again, with a lot of earnings coming out there, you could have catalysts. And if you look here at the Qs, you will see different than the S&P. Look where we are. You had a nice gap up in the beginning of the year, and we are a little bit above all the moving averages, but here we are midway between the highs of September, which are all the way up here, and the lows from November. So if you chose the Qs as your ETF to go with, you did not get paid very well, partly due to Apple and its weakness, so to speak. So, Apple's Wednesday, we'll get into more of that later. But you come into earnings today with the Qs, I think IBM is going to be a really big indicator on what goes on. IBM's expecting 5.25, in earnings and revenue of $29.1 billion. For me, I'm not going to take anything into earnings. If I was going to do an option play, I might go with a put spread, but I probably won't. I might trade it afterwards. And here's your resistance to write down. This is about 197 on the resistance side, and then you have this big gap from last quarter when it missed. And then on the downside, if it starts getting below 188, I think people might start cheating short, and then you have a really big support around 185. So gun to head, I go with the put spread, but I'm not sure if I'm going to pull that trigger. I'll know more if you're listening to my radio around 3 o'clock, 3:15 today.
All right, well, just like we're watching tech this week for earnings, last week it was the banks that was in focus. The XLF has had a nice run, continues to hold above 8-day moving averages. Can it keep up momentum?
I think that all stocks within this group after earnings are been treated a little bit differently, but they all had different moves leading up to it. But overall, I think people were very happy with the bank results. And if you look at the chart of the XLF, like you stated, Britt, here we are at highs, above the September highs, even before the spiders. You look where the Qs were, they were mid-level. So here we are following the 8-day moving average. I'd, write this down because here is support 1, support 2. And within the Qs last week, Goldman was really the blockbuster. Remember off the charts, 121 was a nice little buy. Then you had another nice gap here in Goldman that continued to the upside. And then after earnings, it was even buyable and, finished 144.45. At this point, I would stay with it, but I wouldn't be initiating a trade in Goldman Sachs here. It's extended from the 8-day moving average, but on the flip side, a lot of us did take some shares off in Bank of America above 12. Some did also when it broke the 8-day right here. And this one's, as you can see, not on highs, but it's had a big move. I am not long Bank of America. I'm going to look to buy the dip. I think a dip that could be buyable is probably right around this, 1067, which is the 50-day. So it's below the 8, below the 21. It has to reclaim the 21-day with authority for me to get back in, or for it to, dribble down to the 50-day, which I think will be a nice place to enter, considering, I did sell a nice amount above 12.
And home builders also continue to climb. How compelling does the chart of the XHB look to you? Is a rest in store?
At this point, it's been leading for like almost 2 years. I remember last year at this time, I did a segment with Kramer about the housing recovery and how good it could be for the market. And people are like, oh, no, people have said that like crying wolf. But anyway, it's stuck. And at this point, I do still think that the housing recovery is on. Hopefully, I bought my house this year. But anyway, the stocks themselves are acting pretty well. So if you look at the chart of this group or of this indice, you will see, just like the banks, it's above the September highs. It gapped up. It's holding the 8-day. So again, trends are there for a reason. And right now, the home builders have been following the 8-day, not even giving it any kind of gut check down to the 21-day like it did, back here in December. So at this point, stay with it. And if you're, following it really close to the vest, if it breaks the 8-day, sell some, but then, really for something to change, it has to break the 8-day moving average. And then it's still okay because typically, the 50-day holds. But at this point, it depends where you live. And at this point, if you're living in the home builders, you're living in some luxury.
Well, let's take a look at the XLI, which looks a little extended from its key moving averages. Do you think it needs a break here?
That's what a lot of people think, and people who are shorting it thinking that for the past few months it needs a break are in a little bit of pain again. And it just shows you, like, you look across the board, financials, home builders, industrials, there's so much to go after if you use a plan. And here, you never want to chase a situation. But just to show you the relative strength here, this is the September highs, okay? We were well above there, well before that in the S&P. And then, you had it holding the 8-day, it caught up, and look how this had a nice 2-day extension from the 8-day into new highs. So the industrials themselves have been a great group. Hopefully you took a little bit of a core trade when it broke above, or if you missed it, when it retested the 50-day. And at this particular point, I would not be buying it here or initiating, but you trim some and get a little bit comfy and see if it could continue. But the strength here is hard to argue with.
And gold is also in focus right now after the GLD woke up a bit on Thursday, did retrace then on Friday. So what do you make of its action?
I think it's trying. It's trying to regain some footing. There's a lot of different debates going on in gold. Long-term gold bulls, who've been in it for decades say, you know what, big deal. It's had relative weakness the past 2 years, but we're consolidating a move from, pre-1,000 to, where we are now. And if you look at the chart, as far as approaching it today, for me, you have a nice descending channel here. It's trying to get above the moving averages. It's trying to act better. I am long some GLD. Anyone who's paid for it or bought the strength, though, has not been rewarded. I would say for this to really, did I say really, Brittany?
You said really.
Okay, really change composure. It's got to get above this 164.80 or 164.40 and have some authority. Close through it. Don't close off the highs, and then that'll get some shorts to cover, and that'll get some guys involved for a move that, if you go on a more macro basis, people are saying 2,000, 2,500, etc. Look where we are. as far as the chart's concerned. We're only right around here. You're still going to have to contend with about 1800, which is a huge, huge resistance. So for those of you who aren't gold bugs and looking for a good trade, above 164.5, 165, it could try and work its way to 170. And then you have here, which is the next macro key pivot level.
Okay, well, coming up, we're going to go in the trenches with high beta earnings. But first, a quick commercial break. We'll be right back.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
We're back and talking high beta earnings. Apple releases its earnings tomorrow. The stock finished in negative territory the past 2 sessions. So what level does Apple need to hold to avoid meeting aggressive sellers?
I think at this point, it's not going to get that aggressive selling before earnings. It's already had that, and then it's already had the play the 500 dance game, and it went as low as almost 484. So at this point, I think people are trying to jockey around and see how they could trade Apple going into earnings. I'm going to get very, more in depth. I'm going to get in depth with this tomorrow because its earnings aren't until after the close, and a lot could happen between now and then. If you're looking to put on some kind of option strategy, and you're looking to do it before the close tomorrow, and you want to get in today, do half today, half by the close tomorrow. This way, if you're playing it for earnings, you have your average cost in there. If you look at the chart real quickly, here's that Head and Shoulders top on the micro version that took place before it wound up falling apart below the 21-day moving average, and then this is when it couldn't hold this moving average, the 200, blah blah blah, and then what's really important here is this trend line. You see this trend line that's been controlling Apple all the way from the high of around 703. That's where we're at. So here's the key levels that I will be looking at and trying to formulate an option strategy behind. This is your support. The low here was 483.38 before DeMar came out and said it should go to 600. Well, what happened there? A little 3-day rally. Then they pinned it at 500. I couldn't believe they were able to pin Apple at 500, which was good for them. So right away today on a micro basis, 502.22. If it gets above 502 on a micro basis, you then have this area right here, which is 510.75. And then I think the major area is going to be about 530 and change for it to finally bust through, get some kind of volume. And obviously that's not going to happen until we see the report on Wednesday. As far as right now, Britt, I'm leaning towards a call spread. I think that if it's going to be a solid report and have some catalyst within there, which I'll talk about tomorrow, I think that it could get to 550 pretty easy, maybe 570. So in my mind, I'm thinking about a call spread where perhaps I buy the the 520s and sell the 550s to help finance it because the option premiums are so huge. Some are even doing where they buy the 520s, sell the 550s, and sell the 570s to help finance it. At this point, I'm not exactly sure. I'll talk about it on the radio, but I'm leaning more towards a call spread because if I risk premium paid and lose net $5 on it and they miss and it goes down to 440, which is big support, I'll make a lot more probably buying that priced in move down to 440 versus 20 points, on an option strategy going into earnings. So we'll figure that out as we get closer. Today, I might just do some micro trades.
Well, in addition to IBM kicking off tech earnings this week is Google. Google releases earnings today. Now, the short-term downtrend has remained in control with this stock. So walk us through a closer look at it today.
This one, I'm not as anxious to do any kind of option strategy because it's not really in the doghouse oversold, and it's also not looking great, and there's no reason that they should have a blockbuster report. I know we are recovering, but still, that it has a lot to prove right here. If you look at last quarter, stock was acting very well, and then you remember be at your desk at lunchtime. This would have happened at lunchtime. They came out intraday, and the report was a little light. It came all the way lower, and then since then, it's been trying to repair. We've had a good, a few different trades along the way. This is when it broke this little downtrend right around 676. Here was your reversal that took place in November. And then, it was methodically following the 8 and 21 day, and then it finally broke it. So I think guys that were short-term involved, trying to stay with it until earnings got out, right around here, right around 720-ish. And now down at 704, it's not so discounted from the high, so it's going to need a really good report to get through there. So to me, I would say I'm going to probably trade this after hours. If it gets above 745-ish, on a really solid report, I'll start looking long to see then if it could take out the high here, which is a 770. If the report's not great, and it starts to go below this 697, I do think that you need to follow or go to the 200-day, which is 668, or the pivot low from November. So if you're not trading it into earnings, I would say here's resistance 1, resistance 2. And if you look on the support side here, support 1, support 2, and this is just an average move that could take place versus if it's a big time standard deviation, which I'm not even going to get into because we don't have time here.
All right, well, Amazon reports earnings a week from today. The stock looks like it could be ready to make another move higher. Do you think we'll see that happen this week?
I think that it's been just stair-stepping higher. It's acting best. It's one of the few high beta names at historic highs. A lot of people don't understand the name because of the high PE. I typically don't trade this as actively because I don't just do as good of a job as I could with some other stocks. But if you look at the chart here, with earnings that far away, it could really do whatever it wants. So I know that here's your descending channel that triggered to the upside right around here, around this 235. Then you had to move back to the old highs that brought in some sellers. If you remember, some guys got stopped out right here, and then it held, it held where it had to. It held the higher fib retracement. It held above the 50-day moving average, and then it continued, busted through the old highs, which is always a healthy sign, hung out there, and then went a little higher. And now I just say on a micro level, because we don't have to talk macro until earnings, here is your scenario. You have 274 as a pivot if it gets above to trade for cash flow. And then if it decides to discount before earnings, same way, Google and some of the others, if it breaks below the 8-day moving average and you want to sell it and then revisit it as it comes to earnings, because here's a small trend line, here's the 8-day, so 268-ish should be your line in the sand if you're looking to wait till earnings, and then here's your 21-day, which is bigger, around 262.
All right, Baidu has been under pressure, but the stock did rise a little bit on Friday. So do you think we can expect some type of oversold bounce?
I think a lot of people ask me what a red dog reversal is, and this stock that was pressured for so long coming to the end of the year, found one here. And if you look at the chart of Baidu, you will see there is your red dog reversal. This was when it was acting well and suddenly broke, and here was a nice upper level stop around 130, and then you had a lower level range that it wound up breaking below. And then from here, here is your red dog reversal. Made a new low, closed, strong above the prior day's low, never got back below it, and then you had a methodical move right back to resistance, and then it held here, and now it's trying to hold again. At this point, we have a little bit of time until earnings. It's holding the 8-day moving average, I think, as a short-term trade. This week, if it can get above 112, it's something that interests me for, a potential move higher to maybe around 120. Here is resistance that it ran into, so why not pause there? As long as it stays above the, I'd say 108 area, it could even dip down to here, but I would say about 108, you could see some pent up energy, and it could make a nice little cash flow trade above 112 even before earnings.
All right, time for some quick hits here. Facebook lost the support of its 8-day, so where's the next support level you're watching?
I'm looking at 2850 to 2870 as an area I want to get involved. I know I tweeted out when two guys upgraded it around 32, and that's when I was selling it. People are like, oh, you're selling it, it's getting upgraded. I'm like, I don't care. 24 was a nice buy price, 28 above 32 in front of an invite. Sell some. So if you sold some around 31.5 or higher, you then have the luxury of buying back at the last pivot buy price, which was right around 28.60. So we'll look at the trade there.
And Las Vegas Sands has been consolidating for the past 2 weeks. What level of resistance does it need to clear to get some real momentum?
I think it's done a great job this year trading with patterns. It had a nice long channel. It broke above. If you look here at the chart, you will see, it broke above this channel here, right around 48-ish. Look at this gap. Okay, then it held above it. Little reversal that day, which was good for cash flow, and now it's hanging in there again. It let the 8-day catch up. I think for traders looking for a trade, it's got to get above 53 with some authority, and even if it did that, I think I would probably be involved for a quickie.
And Caterpillar saw a nice breakout on Friday. Is it now a good time to trim some profits?
Well, if you took it off on Friday, unfortunately Friday, late in the afternoon, when everyone went on their vacation, they announced some kind of big write-off from one of their acquisitions, so it's down a little bit. It's always frustrating when a stock closes in the dead highs and it's acting better, and then all of a sudden it comes out with bad news and you have to deal with it, whether it's a salvage or whether it's a sell. So if you look real quickly at it, I am long some Caterpillar, so I'm there with you. Here was your gap up, looked good. I think right around here we started getting involved as it was behaving better. So here it closed on the highs. Did have a write down. I'm going to give it a little bit of time. I'd say as long as it holds above 95, I will stay with it. If it breaks below 95 and doesn't get back above it in the first 30 to 60 minutes, I'm just going to say goodbye and just, count it down as a frustrating trade. But it might be able to salvage it.
All right, and lastly, TBT acted a little bit better last week, still seems stuck in that downtrend. So what are the levels to watch?
This one I'm just trying to hold with small size to see if this, sell the bonds and, money going into equities and rates potentially going higher. So there's been times to like really grind in there and focus on it, and times when it's just flopping around. And right now is one of those flopping around times. Here is where it ignited right around here, and then it held this gap. Okay, and then I think this is when, some guys got aggressive. You had a little bit of a short-term top, and from there it came down. It did hold the gap. It did hold, the 21-day, but, it's still in this no man's land. For this to get going again, where people start really chatting about it, it's got to get back above 66 with some kind of authority. So for me, I'm still long some. My stop here on this is 63.78. If it breaks below 63.78, I'm done with this trade, and I'll have to revisit it at another time.
All right, and heading into trading today, where is your focus? Like we said, we have IBM and Google coming up.
Yeah, I think it's going to be more in tech. Each week it's been a different focus, and the main theme has been to have a portfolio approach and trade around it. Hold on to positions that are working as long as they continue to work. Use chart patterns to add tier sizes to them when it's a great trade, and then as the trade gets in motion, you sell some, get back into just holding some so the market can make you money. Then at extreme points when potentially the market's stretched, you add to your hedges in order to be a bit more protective when we get overbought. At this stage of the game, we're a little bit overbought. We're not really extreme like we were in September because of the speed. But at this point, I think if you do have a portfolio on, make sure you have a hedge. I think even buying VIX here below 12.5 or 12 does make sense, to insure a portfolio, because it's always, it's always cheaper to insure a portfolio, when it's not raining out or there's no hurricane versus when the volatility picks up. So I would stay with the rally. At this point, have a little bit of a hedge on and continue to just have some quick feed and maneuver around the positions based on the chart pattern.
All right, and with that said, happy trading, everyone. Have a great Tuesday.